Welcome to Business Reporter's Future of Insurance campaign. I'm Rachel Hicks. Traditional insurance providers have developed a reputation for cumbersome enrolment of customers and for making the claims process painful and drawn out. The emerging crop of InsurTech providers, those who harness the latest innovations in technology to provide a more streamlined customer experience, have sought to break with traditional approaches to insurance to offer higher margins and more efficient operational capability. But not everyone is comfortable with change, and there is inevitably skepticism around the increasingly central role that technology is playing in the sector. So how can the anxieties of insurers and end customers be eased? And can an InsurTech service be simultaneously secure, efficient, dependable, and hassle-free? Well, that's what we're going to discuss today with Ross Sinclair, CEO and founder of EIP Limited. Good morning, Ross.
Morning, Rachel.
Now, the insurance industry has undergone a huge change over the past decade, and with lots of innovation in technology as well. Can you give us an overview of the shifts that have happened and therefore the change in customer expectations?
Yeah, well, as you say, there have been dramatic changes right across the industry. I think one of the biggest changes we've seen is that our clients and prospective clients are now looking to offer a much broader range of financial products to their customers. And the difficulty that they're facing is the retail estates are gradually disappearing, especially after COVID. And they're finding that they don't have the tools or the platform by which to offer these products to their end users. Traditional
insurers have a reputation for a cumbersome enrolment process and difficulty in making claims. To what extent are customers fed up of this now?
It's true to say that customers are very wary of insurers. And I think that the insurance industry to some extent has itself to blame for this, but they're not uniquely culpable. If you look at the massive increases in regulation and compliance in this sector, that is causing the enrolment processes to be much more complex and much more onerous. On the claims side, there's a wide variety of quality, if you like, in the marketplace in terms of claims processing. And a lot of insurers are very, very good in this area. But maybe inevitably and unfairly, customers remember the bad experiences. And certainly they'll relate the bad experiences, particularly on social media. So I think over time, insurers develop a reputation for looking to avoid or to mitigate claims settlements. I don't think people are becoming increasingly tired of insurers. I think for a long time there has been a suspicion that insurers, and again, as I say, unfairly, insurers are perhaps designing products and processes that have the insurers' interests more at heart than the policyholders.
There's inevitably going to be some anxiety around traditional insurers' fears that the technical changes taking place in the sector. How well-founded are their fears?
A lot of the anxiety centres around the premiums area and the pricing. I don't believe that it's well-founded at all. If you look at particularly mobile device insurance, but generally across subscription-based insurances, the pricing is already very inaccurate. Taking mobile device as an example, the price of these products is based upon the wholesale cost of the device that you buy. The problem with that is that the device is only a small element of the risk equation. And the cost of the device doesn't even factor in the risk equation. The largest part of the risk is really the user. For example, in mobile phone accidental damage, a little old lady would present a very different risk profile to a 22-year-old scaffolder. Up until today, nobody has taken that into account. The good thing about subscription-based insurance programs is that they promote a large number of policies, and by definition that means a large number of claims. So it's relatively easy to quite quickly develop a picture of what shape of customer is making what type of claim. And if that information is used intelligently, then insurers can start to guarantee stability of margins and also substantially increase their profits.
So can you give us a sense of what EIP has done to break with the traditional insurance approach and offer a better all-round experience for customers as a result?
Yeah, well, the EIP has developed tools to help banks, mobile operators, retailers, and others in offering subscription-based insurance products to their customers on a much more efficient and cost-effective basis. As an example, I mentioned the one-price-fits-all policy of the industry, and we've developed contextual-based pricing, which looks at a number of metrics of the customer, so age, location, occupation, gender, and other factors, in order to arrive at the optimum price for that customer. And then if you layer on one of the other tools that we have, which is safe location discounts, that would further discount these prices for a particular customer depending on whether they're in a location that's deemed lower risk. So for example, when you're sitting on the sofa at home, the price comes down. On the claims side, as another example, a few years ago, we developed the very first 100% fully automated claims engine. And that now runs very successfully in many countries. But last year, we raised the game on the claims piece by introducing AutoClaim. And AutoClaim is really the first example of parametrics in our industry. AutoClaim is a tool that sits on the device, and it uses the gyroscope and the accelerometer to detect when your phone or your tablet or whatever is dropped. And immediately it's dropped, it sends a signal automatically to our core system, which creates a draft claim. The core system will then check with you whether that claim needs to progress. Is your device damaged? If you hit the button saying, yes, I need to go ahead with a claim, it will check the address to collect the device for repair. The whole process takes less than 10 seconds and 2 button presses.
So that is surely going to worry traditional insurers who are concerned about losing out. That's bad business to them. How do you ease their skepticism?
Yeah, it's certainly true to say that if we render claims easier to make, then insurers get nervous and we get pushback. But you can't look at these innovations in isolation. You have to look at them in the round. So I mentioned earlier, by introducing contextual pricing, you can increase profitability on these programs by up to 40%. Some of those profits can be channeled into a softer claims attitude. Also, a 10-second claims process costs an awful lot less to manage than a traditional 10-minute call to a call center. So yeah, the claims costs will increase as we massively improve the customer journey, but disproportionately you get benefits on the profit line and also in terms of the management costs of these programs, so you end up with a net positive.
So do you see InsurTech displacing traditional insurance over the coming decade?
There are certainly InsurTechs in the market who are morphing from what is essentially an MGA to a full stack insurance provider and then heading for IPO. But that is an incredibly expensive strategy, and those players are very much in the minority. I don't see InsurTech displacing the traditional providers, but more sorting out the sheep from the lambs. And what I mean by that, if you take a very high-level view of the components of an insurance product, then you have a balance sheet which provides the risk money, if you like. You have a claims resource and you have distribution. And the InsurTechs, the majority of InsurTechs are focusing on the distribution and the claims handling elements of that process, and they're still using a traditional insurer in the background. So what you end up with is a very sexy, super efficient InsurTech wrapper around a traditional balance sheet. Insurers that embrace this new technology and the smartest elements of this new technology will flourish. The insurers that don't will be swallowed up or disappear.
Ross, thank you so much for coming in to talk to us today.
Thank you, Rachel.